And that's where maybe we end the conversation, like why it's so beneficial to be a couple with the SCR tax. So let me tell you, number one, you have to meet the 100-hour rule for material participation. It's so much more powerful as a married couple. That all combines, and there's a rule where no one else can do more than you. The more than you is not your 1 hour, it's our 101 hour combined. So like the bar is just that much higher. Second is you get to work on it together and it counts double. That's 100 hours. And that's what we
Yeah.
advise our clients, like post close, organize your schedule, be there for a week, not 10 hours a day. You guys knock it out. And that's a lot of hours you can knock out. And welcome back to STR at the Best. I'm your host, Michael Chang. I have Liz here with me today. Hey, Liz.
Hey everyone, glad to be back here.
We took a week off for Easter, but now we're back. We're really excited to share with you an update. So we are in contract for our 8th short-term rental. We own 6 in Tennessee. We own 1 in New York, so we have 7. We are in contract for number 8. So number 8 was actually scheduled to close today on the 16th of April, but we pushed it back 10 days because there were some issues that came with their inspection that we wanted to get fixed. That's the main topic that we want to talk about today is Mike and Liz, there's a war going on. There's all this uncertainty. Aren't you afraid of a recession? Aren't you afraid that this is going to be a bad investment? Like, why are you buying right now? So that's what I'm going to hit on today. So Liz, this is our most expensive property. It's $2.1 million. Our last one that we bought in Catskills here in New York was $1 million. So it's over 2x as expensive.
hmm
Does that worry you?
I think for every investment, there's always risk. But I think from an investor perspective, how I think about it is how can you get comfortable with calculated risk? So we have our experience, of course, that we've been doing this for 10 years. That's a big part of it. However, I do think the education that you can provide yourself from learning from other investors, looking at the historical market data trend, kind of block out some of the noise that's happening on the headline.
Let's talk about that noise, right? There's a lot of noise. So I think kind
A
of
lot
what
of
you're
noises.
Yeah, I think what you're saying is, looking at the investment versus the noise, there should be always a reason not to buy. In 2020, you would have been like, why would I buy right now? COVID, world's coming to an end. It ended up being the best time to buy. As the market got hotter, it became, why should I buy now? Because the market's so hot, I'm going to wait till prices come down.
Correct.
Prices have not come down, and it's 6 years later. So
Yeah.
so let's separate that a little bit. And I think it's important, and I really want to share this because you can read all this stuff online, everything, but ultimately it's a me and you decision, right? If you're listening out there, unless you're a professional investor, like you are talking with your husband and wife about this. It's your money, it's your mortgage. It might be your first property, your second property. You might own your primary home, your first investment property. You might own a long-term rental, your first short-term rental. So that's a perspective we hope to be able to provide you today. So let's talk about the noise. Like, what to you is noise right now that you're seeing, Liz? Curious.
In the market, I mean, there's always people scared. I think for me, it's like hearing people gas price all-time high. There's a war going on, and everyone's just uncertain how the market's going to go. There's other political reasons. There's so many other things that you see every day on the headline. But ultimately, like you're saying, it's I try to look at the investment as its own and then look at the historical data to really come up with the educated risk that we're willing to take, right? Just and then like you're saying, we don't have a crystal ball. There's always a reason not to buy. And I do feel comfortable with our experience looking at the historical real estate trends that make me comfortable. Even now, okay, we might be buying at the highest gas price right now. It's uncertain. Higher gas price, less people can afford traveling, or they will travel less. Instead of 2 trips, they'll do 1 trip a year, right? All of those are into consideration. So, how do I make ourselves comfortable and then move forward with the decision? I think that was kind of like the noise you were talking about that I consider.
Yeah, I think similarly too, right? Gas prices,
Yeah.
$4 plus a gallon right now. It's definitely been a big change, but it was $4 like not that long ago too. Actually, maybe like 18 months ago.
hmm
AI and jobs, that's a big uncertainty. When people don't have jobs, like how are they going to travel? The war we have in the Middle East right now, right? That impact. What's going on politically? In a way that speaking for myself, kind of think about that is, I believe that people will go on vacation and travel for work if they have a job, despite everything else, right? Maybe one trip, not two trips, maybe shorter trips. But mostly we're buying in the US, we're buying in Tennessee. It's a drive to market. Maybe people will travel there less. That's definitely a possibility. Flights are also really expensive right now, too. So people that may know would have flew to Mexico or the Caribbean are going to stay domestic. So there's this like second order impacts. Like things might impact one way, but you can argue it a different way, right? And you just end up chasing your tail around because you're like, well, this helpful, this not helpful, and then back and forth, back and forth. And the way that I kind of like triangulate the noise for me is this, right? Number one is people have jobs. Unemployment rate still 4%-ish. 200,000 jobs created last month. So job market's still strong. People have jobs, or you're able to find jobs, even if it's not the best one that you want. Like you're able to find a job at least. I think stock market all-time high. So if you're targeting like us, top 20 percentile income class, like they have a lot of stocks, and stocks are all-time highs. Like literally the S&P, Nasdaq, all-time highs. Like that's just a fact. 3, mortgage rates are down relatively, right? You're still in the low sixes. And then most importantly, now you have the STR tax loophole. It's April 16th. A lot of you guys probably wrote checks for the last week or two. Big, painful checks. I speak from that. We didn't buy in 2025. We were busy, kids, a lot of stuff. Like bought 24, we didn't buy in 25. I wrote a humongous check, and it was extremely painful. So I got in front of that this year. I was like, we're going to buy now. We're going to close in a month. And I don't want to go through that pain again. So that's how, I mean, speaking personally, that's how I've gotten comfortable with, putting a very substantial amount of our personal money, you and I, Liz, like this is our money. This isn't like a third party investor. Like we're signing a mortgage coming out of our bank accounts. As you dove into the numbers, like without sharing all the secrets, because people to copy exactly what we're doing, but maybe just high level, right? Like how did let's talk about that process of looking at the data and the market and how that got you comfortable.
Yes, I think the way we look at data is really just we go into the market, we see the supply and demand of the market, the curve. Where are the competition? Where's the most competitive segment of the supply that's currently available? And where is the underserved demographics? And then just by looking at the delta there, you're able to identify the segment that's underserved. There's clearly a demand for it because the way the data shows the booking trend is so far out. People will overpay to get those properties. That tells me there is a very good opportunity for us to serve that segment of supply, right? So that's why that made me comfortable after looking at the data. It's like the most competitive is this segment of properties. So we are not going to play here. We are trying to find where it's underserved, and then we will try to pinpoint those opportunity. And when the opportunity came, I saw it. I was like, I knew that was the one. I knew right away that hits all the checkbox that we've been talking about. And really, every day I was looking at property, looking at data, basically every single day. Eventually, you just get a hand of it. When you see an opportunity, you see it.
And that for me, as obviously the other party of this, right, got me really comfortable was like you look at, on behalf of the STR, like the best program, our program where we help our clients do this. I mean, you're looking at all the markets, you're looking at every single day, you and the team. I know you don't like me saying this publicly, but but you're in the top 3 to 5 people in the US for short-term rentals. Like no one else has the same level of touch points, real touch points of buying residential STR properties in the US. Like really there isn't. Like we look at 15, 20 different markets like every single day on behalf of our clients. We have our network of our peers built over the last 10 years. Like you take advantage of all of that. Like we have, like just for example, right? Like we have this new client that joined us. He's looking at a very specific market in North Carolina. And we were able to be like, oh, actually we have a friend who has 4 there. Send him a WhatsApp message. Hey, John, how are your 4 doing? Is it good? Okay, got it. Who do you use out there? Can you help us with like, we have a client out there. Can you help us? Like, yeah, sure. Happy to. That's a 6-year relationship. Like you can't beat that. Not to go on a tangent, but I think that's where, as we have 6 properties in Tennessee and like we see that data, once you saw it and when you came to me, you're just like, this is it. I was like, okay, like let's do it. I was like pretty easy. I know how deep you are into it. Lucky for me, I have the top three STR expert.
And I still remember it's every time I buy a new property, I'm still freaking nervous, right? I remember the last one in New York, I was really nervous. I don't know about you, I was nervous. This time, still nervous, but it gets better. And then that memory muscle every time just the more you look at it, the longer you're in it, the more comfortable you get. So that also goes back to if you've been thinking about it, never starts, you're just gonna stuck where you are forever. Have to start somewhere too. And owning asset has historically just been one of the best way to build wealth long term. You might not see it immediately, but over time it does really compound. It really does.
I mean, just for the taxes that we've saved, the cash flow from the properties, the appreciation from the properties, it's been, really a material part of our net worth growth over the last few years or last 5 years is this. I think on your point about feeling nervous, I don't feel nervous actually when we buy something because I know I trust you. I know how much work that you put into it. I know once you find something you have conviction on it. I actually feel pretty comfortable. My job is to make sure we hit those numbers, right? Like I was on the phone with the plumber that was going through the diligence and the pool guy. I was on the phone with the agent today, with the other work that's going on, the insurance, the financing, like all that stuff that, I'm good at numbers, but like I'm good at this stuff too, right? And
Yeah.
it's a good pairing.
And that's your department. That's a good point, actually. Like,
And I think that's why you get comfortable too, because like that stuff, like
yeah,
that I'm going to do a good job or hopefully do a good job.
exactly. So that's a really interesting dynamic we have. I owe almost entire portfolio. I bring you the deals. Like this is a good one. I know this is a good one, and then you will go through a robust, diligent process and find all the issue that might be underlying. So I feel comfortable that this is going to be a strong asset. Even at resale, we will be able to get out if we really have to have an exit.
Remember when you threw the phone at me?
What do you mean? I don't remember.
It's not really the diligence point, right? Remember that one property that you really liked? It's like 1.3 million, upstate New York. We're in contract, and you were like, I was like going through like the Michael Chang process, right? Like every little point going through, like the way I do the work, and then I ended up not. I just wasn't comfortable with the septic. I just wasn't comfortable with it in the well, and then
Oh yeah.
you got really mad at me because I was like, because I killed the deal, and you spent so much time on it. You're like, it was like 8 in the morning. You threw the phone at me. I don't even remember that in the kitchen.
I do not remember, but it kind of rings a bell that we didn't get that property. It's a good
Right.
thing we didn't.
It's a good, yeah, it's a good, and I think that's where like there's like a good tension. We both have to be in line, right? Like you have to like the property, the numbers, like we work on together. There's like a different layer for STRs versus like long-term rentals or something else, right? Like you have to kind of see the vision, which you have in spades, and I can don't have as like you. But you need kind of like both sides of the brain, right? Because there's that. Okay, well, this is good. Now let's make sure it's beautiful. And let's make sure it all works. Let's make sure like the well works and the plumbing works and like there's not a hole in the foundation and like the right insurance, the right loan, like the stuff. I know you don't want to deal with, but like that's my job to deal with while you work on design. I think after this recording, like you have like 3 hours of design work you got to do.
Yes, I do. But
Like
it's all exciting thing. I think that's why having a spouse or partner that really have different skill set and interests, it can be a superpower. It really is, especially couples that's married. On top of that, with STR tax loophole, all the combination together, it really is a supercharge to the wealth.
it is. It actually that's a good point, and that's where maybe we end the conversation. Like why it's so beneficial to be a couple with the SCR tax. So let me tell you, all right. So number one, you have to meet one of the 100-hour rule, right, for material participation. It's so much more powerful as a married couple. Our hours combined together, you meet a minimum of 100 hours. Liz can do 10 hours. I can do 90 hours. Together,
Mhm.
that's 100 hours. She can do 1 hour. I can do 100 hours. It's 101 hours. That all combines, and there's a rule where no one else can do more than you. The more than you is not your 1 hour, it's our 101 hour combined. So like the bar is just that much higher. Second is you get to work on it together and it counts double. You get to double your hours. Liz and I, when we go and work on the property together, I'm doing my thing, she's doing her thing. That's 2 hours. Even though it's like one temporal hour, it's 2 hours. So we spend 5 days, 10 hours working on this thing. That's 100 hours. And that's what we
Yeah.
advise our clients, like post close, organize your schedule, be there for a week, 10 hours a day. Like you and wife, you and husband, like you go and you guys knock it out. And that's a lot of hours you can knock out. So if you're worried about how to hit 100 hours, like that's a really, really easy way to do that. And number three, just like broadly, from a legal perspective, whether you hold it or I hold it, it doesn't really matter. Whether you hold the debt or I hold it, because we're married, right? Like we trust each other. There is that part. You got to like trust your spouse too. And so, that's not everyone, right? So I definitely like consider myself really lucky. Like you and I, like we trust each other. It doesn't matter who holds the property or whatever. Like
Mhm.
it's all the same. And that's really powerful from how to shift risks, how to maximize financing, because as a married couple, you can move things around between each other very tax efficiently. There's an unlimited gifting exemption, for example, between spouses. There's just a lot, without getting all the details, there's just a lot of things that you and I can do together to move things between me and you that really easy tax legally, because married couples kind of like all look the same. But from a risk, financing, and other perspective, it can be very, very powerful in managing to get more mortgages or to lower our risks. So that's something I don't think I've talked to you a lot about, but like it really is like very, very powerful. That's why like I spend a lot of time here, like computer, because it's like it takes time, but it's a powerful thing.
Yeah, for sure. And on top of all those benefits you just mentioned, like go back to the topic of how do we get comfortable? Why are we buying with all this uncertainty around the headline right now in the market? It's also like looking at the assets at the market you're buying. There are a lot of characteristic of the property itself. You want to make sure you position yourself well, right? There, you're not buying in the middle of nowhere in the wrong street, right? You're really looking for appreciation feature of the property as well. So in the future, the resale value will be there. You know that market will hold strong and steady over a long period of time. We're not looking at this in the 3 years, 5 years time frame. The goal when we launch this is we're looking at 20, 30 years and we hold it till we die, ideally, if it's making money, right? So that's you talk about that quite a bit before as well, I remember. So I think with that 30 years time frame or beyond, that really made me feel comfortable as well to buy.
You bring up a good point. I get a lot of questions like, well, what do you do? Like, what's the exit strategy? And my exit strategy actually is very dependent on my entry strategy. I focus on the entry, right? It's like kind of like how you pick a spouse, how you pick the husband. Hopefully, you still think you made a good decision, or pick a wife, right? It's like the entry decision is actually like really important, right? Like buying the right market, buying the right property, being able to hold it over the long term, right? Like that is what's going to create wealth for you. Like the gains are in the hold period, like how long you hold it, right? It's the most tax efficient. The gains compound over time, like a relationship, right? They compound over time. The longer you're in a relationship, the better it gets, hopefully. And then on the exit side, your and I's, like we are going to pass it on to our kids, and they will get what's called the basis step up. If you don't know what it is, like use ChatGPT or something, go check it out. It's like one of the most powerful tax strategies is you pass it to your kids, and they get the basis step up, which basically means that they don't have to pay any taxes on the depreciation or the appreciation that you've had over the last 30 years. It's extremely powerful. And that's what you and I do, right? Like we didn't come into this marriage being like, okay, we need a prenup. Like, okay, like in 5 years it doesn't work. Then like, look, I think you do the work up front. You spend the energy up front making sure that this is the right choice, right? Whether it's your spouse or the property. I think less energy on focus on like, well, if it doesn't work out, then like, how do we exit? Look, that is a fair question. You can always sell it. You can always sell it. It's not. It's less than ideal, but remember, this is an investment. It's not like you're throwing the money away. Like you're buying a house, buying a good short-term rental in a good market. Like it will have value, especially with now the new tax benefit, the one big beautiful bill. These assets are more than they were a year ago, just based on the tax side. Any last words, or not last words, but any concluding thoughts before we end the episode on the property, on the number 8 that we're going to buy?
No, I'm just very excited about this project. And I actually enjoy the process more every time when we buy a new property. I think it's exciting. Even till today, it's the 10th year. I'm just like in this really creative state right now because we're going through the design process and just thinking about how it will all come together in about 2 weeks. It's really exciting. So can wait to show everyone.
Yeah, I'm excited. So folks, if you're listening, I hope this is helpful to you. You know, really design the podcast to help investors on how to buy short-term rentals, and we come in from very much a couple's perspective. Liz and I, we both had full-time jobs. We quit to do short-term rentals together. Been doing it for 10 years. We have kids. We live in New York City. We invest our own money. So we really come at it from that perspective, from a family wealth building perspective, right? Not from a institutional or those kind of things. Like how did like you and I make decisions together to better position our family for long term success. So if you're listening, thank you for listening. Please do subscribe if you find, and share with a friend, family member if you think this they would benefit from this topic. And please leave a comment if there's something that you liked or want us to kind of talk more about on the show. Whether you're listening on Spotify, Apple Podcasts, YouTube, leave us a comment. We'd love to hear from you. And, know that this is us sharing this is helpful for your journey. So thank you very much. And we'll look forward to seeing you in the next episode.